Hello traders, Gary Wagner here, just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday, May 29th, 2020, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen, actually what a month we have seen. It was the last trading day of May. We had equities as a whole over the month increase in value by about 4% when you look at the Dow and the S&P 500, and then take a look at silver, which actually gained about 24% this month. Gold also had a substantial gain. We'll talk about both gold and silver in detail during our technical studies, but first, to the price board. Trading for the month of May has concluded as the markets closed, and the precious metals complex as a whole scored gains across the board. Gold gained $14.70, and basis the most active August contract is currently trading at $1,743. We did issue a trade alert. We'll talk about that in detail when we pull up our technical studies. When we look at spot pricing, there were also solid gains, closing at $1729.33, up about $11.50 on the day. But it was silver that shined the brightest today, gaining almost 52 cents at $18.48.5, and that market now is at a 3-month high. Platinum gained $5 today at $873.10, but in terms of percentage gains, it had the smallest percentage gains of the complex. And lastly, palladium gained 1.73%, almost $33, with futures currently at $1,934.50. Let's take a look at our technical studies. The most interesting month when we take a look at the precious metals. We are looking at a daily chart. On this daily chart, I have Fibonacci retracement levels as the market moved down, and then we also have moving averages. What is most unique about this week's activity is the low that was achieved on Wednesday of this week, when it actually traded to a low of 1683. Of course, when we look at the 50-day moving average, that would be this green line here. You can see that it came just above by, I believe, about 80 cents. Secondly, we have a retracement of 50%, which occurs roughly at the same level as the 50-day moving average. That would be this dashed line right here at 1682.30. What impressed me the most was that we were in a defined downtrend, with the pivot occurring exactly on Wednesday, when gold prices traded to the low of 1683. For the last couple of days, we have seen the market have a series of higher highs, higher lows, and higher closes when compared to the open. And it was the V formation that occurred as the market traded to these lows, hit them on Wednesday, and bounced off of them, that prompted us to issue a buy signal this morning, just as the market opened up in New York. Of course, it did trade to a high of 1754 before settling at 1743. Traders taking the call, we got in at roughly 1740. And we also recommended placing stops at 1719. And when we convert our daily chart into a weekly candlestick chart, we can see the extremes witnessed in terms of price changes this week. That is this green candle with a very, very long lower wick. We're looking at a monthly chart, the continuous contract of gold, and we can certainly see that we had a dynamic month that did close higher. My recommendation is to maintain your current long position and to maintain your current stop. But in terms of a stellar performance, that medal or honor has to go to silver this month. You can see the dynamic range that it had, opening just above $15 per ounce and then closing at about $18.50, a significant rise of about $3.50. That is an increase of approximately 24% on the month. But it is the weekly chart that really reveals the most in terms of this month's action in silver. You can see that for the last consecutive 4 weeks, we've had strong green candles moving to the upside. Market closed at $18.50, and what is interesting about that particular price point is that when we look at recent highs that came in, you can see that back in February of this year, it actually closed just at this point, which is why we are right at a resistance area. And then on the following week, it did open above that, but it sold off briskly, actually breaking through $17 per ounce. In terms of absolute resistance in silver, it comes in between $18.95 and $19 per ounce. To look for resistance points beyond that, we really have to contract this chart. And when we do that, what we can see is that through the entire year of 2017, 2018, and 2019, with the exception of this 1 week right here, this market has really been trading under pressure between $18.50 on the highs, and the lows itself were at about $14, but that all changed recently when silver actually broke below $12 and went to a low of $11.66. We say that because we are now in an area where we can see a series of tops right here, and they're matching up with our current close, as well as this activity that came in at the end of last month. That being said, the market could, in fact, make a play for the highs if it takes out current resistance that come in between $20 and $21 per ounce. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.